And with that, let's go ahead and begin today's event, once again sponsored by Freddie Mac and hosted by National Mortgage News. It's my pleasure to turn today's call over to our moderator for today, and that is Danielle Fugazy, contributing editor with National Mortgage News. Danielle, with that, I'll turn the floor over to you.
Thank you, Aaron. Good afternoon, everyone, and thank you for joining us. I'm Danielle Fugazy, and I'll be your moderator today. We're going to talk about how to embrace automation in lending to stay competitive. While we all have heard and agree that digital alignment and partner integration is crucial, the question becomes, how can you merge the two in practice? So hopefully we'll be able to give the audience some insights today. We have a great lineup of speakers, so I want to quickly introduce them and then get things moving. So first up, we have David Fulford. David is the Vice President of Strategic Technology Integration for the Single Family Strategic Delivery, Data, and Operations Division at Freddie Mac. His responsibilities include overseeing a client portfolio of over 200 lenders with the primary focus on understanding their business and technology strategies and how Freddie Mac can deliver innovative solutions aligned with those strategies. Next, we have Dominick Marchetti. As Chief Technology Officer of Guaranteed Rate, one of the largest retail mortgage lenders in the country, Dominick leads the product innovation team to build groundbreaking tools and platforms that will impact the fintech industry and streamline the mortgage process for customers. We also have Piper Beveridge, who is the Vice President of Government and Strategic Relationships at Ellie Mae. Piper is focused on growing and managing the relationships with the GSEs, government agencies, and other regulatory bodies and industry groups. Piper leads a number of key strategic initiatives in partnership with GSEs and government agencies that will further improve transparency and predictability throughout the loan process, from origination to delivery. And last but not least, we have Kevin Kaufman on the line, who is the Senior Director of Freddie Mac Loan Advisor, Strategic Partnerships and Integration in the Single Family Division. He and his team oversee Freddie Mac's technology partner engagement strategy with the optimization of Freddie Mac's business capabilities within technology partner solutions. Okay, so with that, let's get started and let's talk about how automation is driving change. David, why don't you kick us off? Can we start by talking about how automation has evolved over the past several years and what the impact has been to the mortgage lending industry?
Yeah, absolutely. So, when we talk about automation, automation itself isn't new. It's been around for a while in the mortgage industry, but it started off as very simple tasks that were manual tasks that were automated. There were things like, opening up a document, pulling off a reference ID and storing that in your LOS, or maybe once a task is completed, automatically creating the next task. But over time, and what's really happened over the last few years, is that automation has gotten much more sophisticated, primarily because of the kind of congruence of partnerships between all the source data that's available out there for the lenders to leverage, be it through relationships with Freddie Mac and other industry partners, or be it through integrations like Finicity or FormFree, or there any of the fraud tools that are out there. Instead of just simply doing one task, it will actually take in data, assess the data, and automate something that was probably complex and higher risk previously. And where we really have been focused on at Freddie Mac is where we can find opportunities to drive down risk by automating complex and risk or fraud-prone activities. And that really gets into bringing in source data, running it through models, having machine learning in place so that these models evolve over time and get more and more sophisticated and more accurate. So while automation's been around for a while, what it's doing now is creating much more value, I think, to the industry in ways that ultimately certainly drive risks down, which we love, but also create true operational efficiencies and a better borrower experience. And I think where customers have been really focused on trying to leverage these capabilities is how it plugs into the digital experience that they're trying to create for their borrowers. While they certainly have their eye on risk reduction as well, they're competing with many other lenders out there, and the better experience they can provide through that digital through a digital experience, the more that they can compete. So I think, from our standpoint, it's really still the tip of the iceberg. We're very excited about the offerings that are out there already, such as, appraisal waivers through ACE, which is automated collateral evaluation for Freddie Mac, and also automatic assessment of a borrower's capacity, which is for Freddie Mac called AIM, Asset and Income Modeler. Like those offerings provide real value. We see it in the data that we have on our end as these loans get purchased by us. We can see how much cycle time reduction is occurring. We know how much we're saving from an appraisal standpoint for the borrower. But really, it's just the beginning. And as we've started to advance our capabilities there, the lenders have been operationalizing and optimizing around these types of offerings. So from my standpoint, I think we're really just beginning, but the lenders that we're working with, one of them specifically, Guaranteed Rate, in the panel with us today, have really focused on how they can enhance these types of offerings within their operational process. And the results have been very promising, and we expect the results to continue to grow. So, I think that's probably it from my standpoint. I'd love to get Dom's take on automation as he's actually doing it on the front lines.
Yeah, thanks, David. Good morning, everyone. Yeah, it's been a wild ride. I mean, I think as David pointed out, it's a forever journey to really drive down, operational cost, drive down risk, reduce friction, increase, sort of the consumer experience, improve the consumer experience. I think this last year has been incredible. So I think, automation obviously is critical. Like I said, forever journey. I've been in this business for a very long time, and I think at this point, it's been really rewarding this past year. We forget for a minute, COVID and what's behind COVID, but what it forced us to do as an industry was we needed to leverage a lot of these capabilities and tools and really get them, top of mind and in front of the market in order to just operate. So, when COVID hit, as all of you had to do, Guaranteed Rate had to shift, 7,000 plus individuals really overnight, over a couple of days, to start working from home. So we saw some just very practical, tactical problems that automation needed to help solve for. And we were able to use basically the investments we've been making over years and years, and the learnings over years and years, practically immediately to make a material impact in the business. So, part of the things we saw were relatively simple in the grand scheme of things in terms of the availability of tools like, classification and extraction for documents. Well, if 100% or 90+% of our workforce, 99% of our workforce were working from home, how do we deal with physical documents? How do we deal with the classification of those documents? And ultimately, if we can't get closed loans to our counterparties, then we're out of business, right? So we had to figure out a way to increase efficiency there through automation, and we did. We were able to partner with a company called AI Foundry to use classification extraction technologies to automatically stack files and deliver to our counterparties. Those investments that we've made over the years, right, we're kind of paying off. I think as David mentioned, in terms of then, kind of once we got a little more comfortable with COVID and everyone working from home, the next order of business was, lifetime low, interest rates. Well, how do we deal with fluctuations in volume, bigger than we've all ever seen? And we're pretty good at it as an industry, dealing with the peaks and valleys that are thrown at us by the market. But for us to see, our business has seen 100% year-over-year increase in fundings. And a huge part of that was what David had mentioned. How do we get loans done? How do we deal with this volume when appraisers can't go into people's homes? How do we leverage, the capability around, ACE, right? And basically doing, automated collateral valuations, as part of our digital mortgage process, so that we're able to take full advantage of rep and warrant relief around collateral. How do we do that? How do we minimize sort of the interactions that we would have face-to-face with borrowers and leverage more digital means, provided by AIM. So again, we were able to use a lot of those capabilities, through, again, longer term investments that materialized, to basically allow us to scale our business and to continue to operate, in these times that we've never seen before. And that continued through the end of the process with things like, hybrid e-close, remote online notary, all of these different capabilities to, again, changing our focus from efficiency and cost for a minute to basically say, how do we really optimize around consumer experience and something that as an industry we've never dealt before in terms of limiting face-to-face interaction, while doing, at least 2x the volumes that we've seen before. So, I think across the board, those dials that we can turn around, risk, cost, consumer experience, where we exert focus, heavy dependency, not just on the availability of these technologies, which have been around, many of them, even some of the things that David mentioned, for 2 or 3 years, other technologies for much longer than that, but really forcing us to figure out a way to really be creative in terms of how to get those to market, get them in the hands of our production and ops teams, get them into the hands of consumers, in a way that doesn't totally upset, all of our processes and really create greater inefficiencies has been, both an amazing challenge and, incredibly rewarding for us. And I think as an industry, we've done that really well, some better than others. And we're able to kind of, one, help the country get back on its feet as it relates to, financial aspects, but two, just provide great, goods and services. And personally, it's extremely rewarding to be in the mix and in the game and making a difference.
Thanks, Dom. Kevin, would you mind jumping in and just talking about it from your view, from the partner perspective?
Yeah, so absolutely. And I think just to help lenders out there, 100% of you are leveraging service providers for one thing or another, right? Where you start to get some of the separation is you could have some folks out there like Dom who have the ability and have the resources to kind of build things around the tools that they have. But that's not all of you. And so what we look at is, from a partnership perspective, what does it mean for you? So for those of you who have to leverage tools out of the box, how do we help kind of build that bridge with the partners across the ecosystem to really think about you? And I think, we kind of take our eye off of that a lot, is there are so many of you who are dependent on those ecosystem providers like an Ellie Mae to deliver that automation. And so just pulling those things together for you and making sure that we look at the whole situation. Somebody like Dom may look at data. So did he get an ACE? He might not need workflow built into his systems for that. He may be capable of doing that on his own completely, but others really need that data point. And that data point is not only relevant from, hey, did I get ACE to help know when do I order an appraisal, to what did that do to my time frame when I get to capital markets, when I get the execution as a whole? What does that mean? Can I actually take a bucket of my loans and create a different lock bucket and deliver them in a different cash window and potentially deliver better pricing for it? And that's really where Ellie Mae and our partnerships across the board kind of come into play, is making those data points available and building workflow. Piper, what do you think?
Yeah, no, thank you, Kevin. That's great. And I'll jump in on a couple things, everyone has said. I mean, I think this, automation is the answer, but, there've been a few things that have been holding it back over time. And so we've talked about document classification and getting the data out and getting to sort of really clean data such that it can be automation ready. That has been like one of the huge challenges, right? And then there's also just the connections between sort of all the players in the industry. And, in our industry, there's been these legacy integrations that have been around. And I would say the evolution of sort of more modern integrations and APIs really enables us, Ellie Mae and other providers to allow that automation between steps. When there's, the interactions between us and partners and us and lenders is sort of happening automatically and can move a process on to the next step. So the idea is to get to exception-based processing and have a capability for that out of the box, for lenders, and then also allow them all the tools they want to use on top for someone like Guaranteed Rate, who can, create their own workflows on top of that.
Thanks, Piper. Okay, so let's move on and talk about the importance of the process and workflow assessments to remain competitive. Dom, I would ask you to start off, and let's start with, how is automation helping you meet the needs of borrowers and staying competitive? Can we talk about that a little?
Yeah, 100%. So, I think, in a vacuum, right, all this technology doesn't do anything by itself, right? So terrific technology and unimplemented is worth kind of precisely zero, right? It has no impact. I think when you look at basically, aligning process improvements, change management, how to get the people that are using the tools, ideally the tools are able to be implemented in a way that are pretty frictionless, that don't require people to relearn how to ride a bicycle, but are, sort of minor and incremental changes. I think you're likely better off. But ultimately, how do we continue to kind of align and dovetail, process improvements with, some of the underlying technology and capabilities? And I think that's a pretty hard thing to do. So, we've been really focused at Guaranteed Rate on incremental improvements versus these big bang type solutions. So as an example, with single source validation, there's amazing tools available. But truthfully, when I look at the intersection of all of the rep and warrant relief we can get for asset, income, and employment, the number of loans that qualify for all of those, from an agency perspective is single digit, percentages at this point. But we're seeing, 70+% will see one of those indicators come back with rep and warrant relief. In the hands of an originator, even, originators, I think we have originators absolutely the best in the business at G-Rate. But we're still, we know what we know as human beings, right? We ask for some documentation. We kind of lean on all of the experience that we all have. So figuring out a way to sort of align again, hey, we have rep and warrant relief on one of these items. We don't need some of the documentation that we typically need. That has a cascading effect. Obviously starting at the beginning of the process, the consumer experience is way better, right? We're not asking to run down documents that we're struggling to figure out where they are, that we don't do this very often as consumers. We don't get very many mortgages in our lives, right? Then second is from a processing perspective, clearly, and then underwriting. Underwriters as one of our most expensive resources in our industry, the less that we need to look at to really allow us to center on, really making decisions around, how do we really evaluate this transaction and this consumer and this property, and really figure out the best fit and how to serve them the best, by stripping off some of the stuff that's unnecessary, because we already have evaluated, and we have agency alignment, we have Freddie alignment, on this particular transaction. We're seeing, across our company, that unless we're able to kind of use technology to stitch some of those things together by, sort of front loading it, right? So how do we really assess the AUS response? How do we assess what we get back from LPA? How do we understand that we're good in certain key areas? So then we can really focus and exert our energy in other areas is really one of the primary areas that we're focusing today as a company at G-Rate, is just to really, again, stay focused on the stuff we really need and figure out a way to really leverage the automation. And that's sort of central to technology, I think, is right, how to get it in the hands of consumers in a frictionless way. So I think I'd probably, double down on that, single source validation versus human behavior, technology versus change management. And those things aren't independent, right? They're totally aligned and need to be dovetailed.
Does
Yeah,
anybody
and
have-
Danielle, if you don't mind, if I jump in here
Yeah.
as well, Dom makes so many good points. I want to circle back to a couple of them and just talk about how some of those are kind of consistent across the marketplace. Certainly, Guaranteed Rate is always on the front edge, I think, of looking for new ways to deliver technology in a way that helps their customer. But a lot of their challenges are not unique to them. And, one of the biggest challenges that we see out of the gate is a lot of lenders just don't simply get started because, he brings up a good point about starting small and then growing. And, we've seen lenders who have started small and build some consistency and knowledge internally around how these things work and then slowly expand. And then we've seen lenders who kind of go in big without necessarily trying to pilot and really drive some specific quick wins into their organization. And the adoption challenges are much bigger when you're going with these big bang approaches because you don't have that kind of center of excellence internally, and you don't have advocates internally say, hey, yeah, I did this. I used this offering. I closed this loan 10 days faster. Like those kind of things internally, especially when you're talking about loan officers who have been doing this for a while and know really specifically how they like a loan experience to be for their borrower. They're not going to adopt these things unless they know that there's real value there. But it's important to start small and kind of grow from there. And then the other thing I'd want to call out is that, we really view these things as foundational. So, talking about single digits where we get all these things hitting, it's very true. But if you look at our offerings over the past 2-3 years and how much it's grown, now at some point that's going to hit a tipping point, and all of a sudden 10% growth on something that was already hitting 30% of the loans becomes a lot more significant than 10% growth on something that's hitting 9% of the loans right now. And we have offerings like ACE where we've seen that eligibility and coverage grow over time. And so when you talk about being competitive, if you aren't at least dipping your toe in the water and getting a sense of how these things work and how they can drive a better consumer experience for you, you're going to be behind. And we already see today, if we look at our lenders who we know are investing the time to understand these offerings and build workflow around them, they're seeing anywhere from 25 to 50% better results overall. And that gap's only going to grow over time because they're going to get more sophisticated around what they can do with these things. And, from a Freddie Mac perspective, these offerings are just the beginning. We have a lot of other capabilities that are going to be coming on top of them. Not to mention, we'll expand eligibility and we'll expand coverage and we'll continue bringing in great partnerships through Kevin's team. And if you're not there already ready to take advantage of these, it's going to be a challenge. And, looking at where we're at right now, just with all the COVID challenges and the economic challenges, everyone's been forced to try to scale up. The lenders who are at least in position to understand these offerings better have been able to scale up faster, take on more volume, provide a more consistent experience to their borrower. So at some point in time, this type of automation is going to become table stakes. And if you're not there with those table stakes, it's going to be very challenging to compete.
Thanks, David. I would like to move this over to Kevin. Kevin, would you mind giving us your perspective again?
Yeah, so I would break it into a couple different points, and just pretty simplistically. So one, I think it's evident in the market share changes that we've seen in this industry. Those who look to adopt technology move forward with the evolution of consumer technology as a whole, right? Not just the mortgage industry, but our demands as consumers have changed so dramatically, right? I don't know about you, but for me personally, I can't imagine going into a situation and saying, hey, yeah, I would love to pay $500 for an appraisal. Hey, yes, let me go find all of those documents that you're asking for. Versus, yes, I can click through all of these things on my phone. And so as a consumer, and I've said this before in different forums, but we're all consumers. You have to think about what these transactions mean to you. And those folks out there who have adopted it, one of the biggest challenges, the second biggest point out here is those who have the challenges really look at how technology needs to retrofit into their existing process versus taking the opportunity to really move forward and say, where can I change my process? How do I evolve what we're doing to take advantage of all of these things that are on the market? And you have so many tools that are out there, but again, put yourself in the seat of the consumer and think about how you want your transaction to go. And I've gone through several recently. Dom said, how many do we go through? It feels like I'm a glutton for punishment and just love to do this. But, I tell you personally, I'm not going to any lender who's not able to provide the value of what an AIM brings, the value of what an ACE brings. Somebody who's not delivering tools to me electronically to my phone. Piper, I know you guys have a lot of those tools in your quiver, so I'm interested to hear how you guys approach it.
Yeah, no, thank you, Kevin. And I think we've worked really hard at Ellie Mae to develop sort of the partnerships and solutions with all of your AIM partners and seed the system so that when those orders are made and the results come in, it's, kind of automatic to make that transaction to Loan Product Advisor and get that rep and warrant answer. And then, what lenders really then need to know is, okay, what do I have? And so we've also tried to make it easier for lenders to see the status of all their submissions to the Freddie Mac tools and whether they have an ACE, and make it very clear whether there's income, rep and warrant, and assets have been validated for rep and warrant. And then, and to do that in as seamless a process as possible, to take time away from the processor and underwriter, of going to find these things themselves. So there's the consumer experience that you're talking about, and then there's the operational procedure as well. And then I would say what we've also been doing in parallel with our AIQ solution is creating some AI-driven solutions that will help lenders calculate income and analyze income and credit. And we're working on AUS as well, such that it takes up to 80% of the time out of the tasks to do those things where mistakes can be made. And these are really complementary, right? We know we're calculating it correctly in less time. We know we have the rep and warrant relief, and we can present it to the lender so they can take time and cost out of the process, which, now you can't find enough underwriters to handle the volume we've got. It's just as Dom said, we've sort of, this unprecedented time has really made lenders look up and say, how can I get more efficient?
Thanks, Piper. Let's talk now about the partner ecosystem and leveraging integration. So, Kevin, let's start with you and talk about Freddie Mac's approach to partnership with software and platform providers.
Yeah, so I think we all know there's a ton of providers out there that provide services to just about anything you can think of. And it's key. I mentioned earlier that 100% of the lenders out here have to leverage these providers for one thing or another. So I think about this topic, and what's relevant in this space is integration. I mean, we're talking about integration. In order for any of these things to work, you have to be looking at how these things are integrated. So as you move forward, it's I'm selecting partners, I'm looking to move forward with a specific solution. But in order to achieve an optimal state, in order to get to the place of minimizing steps, it's just not, are they integrated? It's how are they integrated? And having true bidirectional integration available from systems. So at Freddie Mac, we look at it and say, is there customers that want to leverage this platform? That's critical. We don't look to just bring things to the market and hope folks are going to use it. We're looking for our customers to drive us in the direction of what we should be using and how we should be doing it. But we look at it in a way that we really expect that there to be integration with the other solution providers. LOS systems are core to this industry. POS systems have been around for a long time and have continued and evolved that you're seeing so many new players. But the integration of how all of these things work together, there's no way we can help deliver content as we intend it to be delivered and the capabilities as they're delivered to our customers without thinking the entire process through to say true integration, not just from our capabilities, but be smart enough to know how do they work across your ecosystem as a lender. And that's why it's always important to have great partners and thinking through who have lived through those failures as well as successes to help you get to that next step. So Piper, I mean, we do this a lot with you. I'd love to hear yours.
Yeah, no, thank you. I mean, I think we spent a lot of time thinking about how to modernize integrations to do just that. And we've more deeply integrated with the Freddie Mac tools, not just Loan Product Advisor, but Loan Quality Advisor and Loan Closing Advisor to get that sort of full bi-directional, so we can really take advantage of new offerings as you do it. But then on the other side, we have a large partner network, the largest in the industry, and we're, with thousands of solutions, connected to our platform. Right now, we're embarking on that modernization so that the way that integration is more data is coming back. And then once that data comes back, we can automate sort of the process. So we're rolling out automated service ordering, which lenders will be able to automate when to order an appraisal or a flood certificate or other services along the process. And we're working on that. It's first iterations are coming out now and will be evolving over the next year or so. But then it's not just the order, right? It's the back and forth between the partner for those services that might take a few days, and making sure the lender knows when it's back and that maybe the next step could be kicked off. And I think that's where, the industry is going, and how we really will be able to get to exception-based workflows, and where, processors can clear tasks and underwriters, get a more complete picture early in the process.
Thanks, Piper. Dom, I'd be interested to hear your point of view on managing the partner ecosystem.
Of course. We've been really focused as a company on, focusing on differentiation and really understanding and thinking about what we really do best and what is unique to Guaranteed Rate versus, what is something that is more of a commodity, and how can we leverage, the capabilities that exist in the industry for, some of the more commodity type, applications and tools. And again, really focus, everyone has constraints, us included, in terms of, where we can really exert our energy. Ellie Mae's been a fantastic partner for us. And I think we're aligned in terms of saying, okay, we're partnered with Ellie as it relates to, some of the foundational, things that I would say are calcs and some of the underlying data, some of the regulatory issues, and really allowing us to leverage a lot of the capabilities in the form of APIs and other integration points to allow us to really build unique solutions, next to and on top of and underneath, Encompass. So, we've been focused on building out what we believe is really critical is our consumer experience, being proprietary to serve our specific and unique needs, with us being, among the largest of really relationship-based, distributed retail, direct type retail business. So that's super important to us. We don't think anyone else can meet those requirements, but how do we partner with the folks that can provide, kind of the underpinnings, if you will. Same thing from a downstream partners, single source validation partners, things like that. We've had fantastic relationships and, kind of give and take. Hey, we'll try this out. We're not sure exactly what it's worth. We understand your cost model, but put that aside for a second. Let's figure out first how to prove value. And then second, we can figure out how to get into a longer term relationship that makes sense for both of us. Freddie has helped us tremendously in allowing us to kind of partner with them in terms of, many of these different pilots where we're learning together. Like David said, what started as, very small sort of incremental test on 100 loans, 1,000 loans, 10,000 loans has now led to something that, is pretty mainstream and fundamental to our business. And we're seeing, incremental improvements where that 6% is becoming 7% and 8%, and the 72% is becoming 74% on, individual sort of single source validation rep and warrant reliefs. So, it's a bit of a grind. It's a lot of energy. I think one of the biggest decisions as lenders we need to make are, it's getting a little easier, or theoretically it's getting easier. It seems like ICE is buying everyone, maybe followed by First American, maybe followed by Black Knight. And it seems like there should be, with that consolidation, some greater sort of integration, which I think is coming, and then, the connective tissue between these, like Piper mentioned, about how to make it really a seamless consumer experience, how to make sure that we're not forcing, our production and ops folks to think about too much change all at once. They're under the most pressure they've had in their entire lives in terms of this volume, again, coupled with all the COVID pressures. And, we need to be really thoughtful, not only of, again, the capability, but of how we get it in their hands, how we deal with connecting the dots between these things, and ultimately how it impacts process, which will translate again to, how we appear to consumers. But it's paying dividends. It's, all these partnerships and all this work is really paying dividends. And again, first in terms of allowing us to continue to do business in these crazy times, and then also allowing us to continue to scale. And I think there will be winners and losers. I think the people that are making these investments and are chipping away and getting better every day will continue to get better every day.
Thanks, Dom. So I want to move on to probably like the last topic that we want to talk about, and then we'll go ahead and get to some of the questions that folks have been submitting throughout the webcast. Okay, so let's talk about practical available solutions that can help lenders scale. David, I want to start back with you. What can your clients do today to take advantage of automated solutions, and specifically how they can help scale their businesses?
Sure. Scalability is probably the greatest single challenge we have out there with any new offering. And certainly we've seen things start to scale. I'll throw a couple of quick numbers out there. Scale means something different to Freddie Mac than it probably does to Guaranteed Rate, because we're looking across the full spectrum of lenders, and they're very hyper-focused, as they should be, on their business. But, if we look at something like ACE today, the adoption was already there. An appraisal waiver is a huge tool, and you have to learn how to be able to take advantage of it. But certainly with COVID, lenders who maybe weren't taking advantage of it before have figured out how to do that now. But if you look at the aggregate level, up to, I think, a couple of weeks ago, Freddie Mac was responsible for $330 million in borrower savings for appraisal waivers, just this year alone. And I think that equates to about 5 million or more days of cycle time reduction. That's significant. I mean, that's huge savings when you think about cycle time reduction, what that means from an operational efficiency and the cost of funds and everything that's tied to that. That's pretty huge. And if you look at AIM, which is not adopted at the level that ACE is yet, it's still responsible for 135,000 days of cycle time reduction this year. And we think it's only being utilized about a third of the time that it can be. And so these things have started to scale. The fact of the matter is they're just not scaling as fast as we would all like to see them scale. And so that's really where Freddie Mac's been doubling down over the past, I would say, 6 to 9 months, is how can we help our lenders help these scale at a greater level. And a lot of the integration and connective tissue that Dom mentioned is very critical here, because if some of these things aren't plugged in properly, is the most simple challenge can be very difficult to overcome. But to be a little more tactical in my answer, if we look at the lenders who are scaling the fastest, they're typically the lenders who have invested in actually understanding their data and analyzing what's working and what's not working through their workflow. And I know that sounds very simple, but we still meet with a lot of lenders today where we put data in front of them that we've analyzed based on what they've sold to us, that's a surprise to them around how effective certain offerings are, or where they may not be taking advantage of something where they could. One of the most simple examples of that is we still get a lot of loan product advisor submissions where they miss out on ACE simply because they already ordered an appraisal before they submitted to LPA. And so, that's something that they shouldn't be doing. I mean, they're missing out on a clear opportunity, but they aren't even managing that part of their data to see that that's an opportunity. And so lenders need to really make sure that as they do start small and grow big with these things, that they have the analytics and metrics in place to be able to analyze this and figure out how they iteratively grow. So that's a really important one. And the other one I'd throw out there, the squeaky wheel does get the grease. Like our lenders who continuously come to the table with us and tell us what's working and what's not working, that drives the evolution of our products. And we listen very intently on what they share with us. And some lenders are really great and hold nothing back, including our partners here today. But, it's once a month I'll be talking to a lender and they'll express a challenge to me that I had not heard and couldn't believe that they were living with, that if they would have shared that with us, we either had best practices that could help them get over it, or it's something that we need to address in the offering to enhance. And so you got to be vocal, you got to dive in, you got to be vocal, and you got to have metrics around these things so you can measure how you're doing. Because if you can't measure, you're not going to be able to incrementally improve. And that's really essential because it's going to be those small increments at first that eventually grow to a crescendo. And you have to be in position to take advantage of those small increments.
Don, can you share your thoughts on how automation impacts the ability to scale?
Yeah, I would love to. So I think, starting high level, I think we remain, again, laser focused on, how to strip out the mundane to really allow our production ops folks to focus on where they can have the biggest impact. I hear it every day from our CEO. He's an incredible guy and pushes super hard on the idea that each one of our VPs, read that as originators, are CEOs of their own business. And I think that's never been more clear than in Sean Benosian. He recently, was the first originator to hit $1 billion in production, a couple of weeks ago. He operates like the CEO of his own business. He's constantly working to kind of optimize his business, to strip out the mundane and focus on the stuff where, he's really unique in his ability to really serve customers and to deliver on what he says and close loans on time. I think, our focus kind of follows that direction and says, how do we really look at some of these, again, practical, really tactical opportunities that we don't have to boil the ocean. We don't have to taskify everything and strip it down to 1 million tasks. Ultimately, I think that there's an opportunity to do that. But, we've been focused on, in no particular order, things that are tangible, that are available, that are work, right, from a change management and from an integration perspective. But, I've already mentioned, document classification and extraction. If we can strip off 15 or 20% of the time it takes for a processor or someone, getting a file ready for closing or post-closing, that they don't have to figure out what the documents are, and that we can put them in a very consistent, call it stacking order for underwriting or for closing or for post-closing with no human intervention, that's gigantic, right? And it's available. It's been around for a long time, right? And some companies do it better than others. Some companies are harder to implement than others, but it's something we can see immediate lift. Single source validation, we've talked a lot about. It's been available for now several years. Again, it can be manual. You can run these services, can change your process incrementally, right? So don't ask for an appraisal up front. Like David just mentioned, don't ask for on the back of my business card the 2 years W-2s and, 3 months of pay stubs, but instead run the data first, evaluate the results. You can do that manually. We have technology at Guaranteed Rate that's automated, a vast majority of that, but it doesn't need to be to necessarily impact your business in a material way, right? And like David mentioned, there's consumer impact from a cost perspective. There's consumer impact from a time perspective, from a complexity, and that, pays dividends internally as well. There's agency condition mapping, how to take, agency conditions that are coming back, from LPA and translate them in friendly terms. Again, we have some of those capabilities in an automated way, but they needn't be. But you're basically asking for exactly what is required by the agencies, marginally more complex for non-QM and other investors, but same rules apply. And lastly, I'd probably touch on, e-close, hybrid e-close, remote online notary, huge consumer impact, particularly in these times. They've been around for a very long time, but, adoption has not been great up until the last year. And, in our own business, we've seen a 5-fold increase in adoption for, e-close, remote online notary, which has done an amazing service for our consumers and really allowed us to close loans. And again, you can see it in numbers like Sean's, where, if we can remove friction, if we can help him be more successful by focusing on the stuff he does, it's something that, again, is amazing for our company and, personally pretty rewarding for the guys that are working on some of these things too. So, I just put it in the terms of let's again start small, like we've all said, and let's implement some of these tangible, practical solutions that exist. And it may be more manual at first, but there's an opportunity to continue to improve them over time.
Thanks, Dom. Piper, can I push this over to you to give us your perspective on scalability?
Sure, and I think Dom teed it up. I mean, really, it's all about increasing productivity so you can get more loans done in the same amount of people or in less time, and with volumes where they are. That's what we have to do. So optimizing on the things that take time out of the process is what's key, right? And so starting where Dom started it, understanding whether or not you have an ACE or an appraisal waiver, which takes 10 days out of the cycle and saves the borrower money. That's great. But then, in Encompass, and you can use business rules to automate the rest of the appraisal workflow. So if I have to get an appraisal, let's get the right kind. And then when it comes back, let's route it to the right underwriter of that appraisal based on the risk score. So that we really optimize the time we've got. So that's, capability that lenders can implement today to make the process better. Order income and employment and asset verifications, that takes time out of the process as well. I think that has been shown. And then automate service ordering to sort of make that more efficient. Again, let's take pushing buttons off the loan processors list. And then we have this solution, AIQ, which Dom was talking about, their document classification and extraction. We have a solution that does that. And the time taken out of that is measured in hours, not minutes, when you're talking about getting all the data, the dot classification data, and getting it into the right system, and then adding artificial intelligence and machine learning technology to perfect that data so you can automate from there. That solution is out there today and has helped lenders scale in the way you're talking about. And then using the income and credit analyzers takes a lot of time out of the underwriter's time, where there are, it's highly error prone. Calculating income is still the number one issue, mistakes happen in the loan manufacturing process. So taking both time and risk out of that. Those are all solutions that are out there today. And, working with partners, across the ecosystem, are moving more and more to sort of automation, which will help get that, help lenders scale.
Thanks, Piper. Kevin, I don't know if you had anything that you wanted to add to that.
So I think we're probably running close on time. I would just say the key to what everybody's saying really comes down to implementation, right? You have to have successful implementation. You've heard some of these terms, but you want to think big, right? It doesn't mean that you start big. You start small. You've heard us all say this, but you have to think big enough to understand how the things you want to implement can fit in to what you're trying to do potentially in the future. So you have to have that lens of it. Think big, start small, get a small group of people, prove out what you're trying to do. These things don't have to be overcomplicated. It doesn't need to be your entire staff. Start small with what you're trying to do. And then the last is deliver fast. If you start to move these things in that line, think big, start small, deliver fast, you can see the success. And when you deliver fast, you have to set goals and expectations and provide documentation. And at Freddie Mac, we're here to help you. So pick up your phone, call your representative. we can help you think through a plan that makes the most amount of sense for automation, leveraging our tools with our partners. We'll come with all of the ecosystem providers that you're looking to leverage, even expertise and best practices to really help you succeed. So I mean that. Please pick up the phone. We're here to help you. These are hard things, but we can help you build a simple plan.
Okay, thank you. So we have a few minutes left here and we'll get to audience questions. Please note, we won't be answering everybody's questions. So if we do not get to your question, have no fear. The folks at Freddie Mac will have these questions and they'll be able to answer offline. So with that, let's get to the first question. Okay, with client integration, what are some of the challenges Freddie Mac has anticipated and addressed with their clients? I think this goes back to what David was talking about before, the clients talking to him and, you know, telling you some of the things that, some of the issues they have.
Sure. Yeah, you know, I'll start by saying, you know, especially with, you know, for ACE, the adoption challenges are kind of behind us, in my opinion. Certainly, like I said, there are still instances where the first submission to Loan Product Advisor already has an appraisal. You know, we're trying to manage that out with our lenders as much as possible. But I think the value is very well understood around an appraisal waiver. And there's no adoption needed for a loan officer or a borrower unless they just really want an appraisal. I think the value is kind of understood. AIM is a little different. You know, short of something like the work number where you go direct to a payroll provider, it requires the borrower to do something like share their credentials, which can be a scary proposition for certain borrowers. We are starting to see those challenges subside over time. But ultimately, you know, these offerings have been out there for anywhere from 3 to 4 years between pilot and broad. And we've amassed a lot of best practices for each of these offerings. And as we look at, you know, talking to these lenders and working with them on these products, no matter what the offering is, we probably have 10 or 15 best practices that we can help you with to understand how to get started. You know, we keep saying start small and grow big. And we really mean that from the standpoint of, you know, we can help you understand a very small population of where you can have greater eligibility in early scalability. And then from there, show you how to kind of evolve that over time based on how sophisticated you want to get. So we have a lot of consultative capabilities at this point, just from the sheer fact that we've worked with so many lenders over the past few years. And are very happy to dig in and share those with lenders as they want to dig in with us.
Thanks, David.
Yeah, David, I think I've one thing to add to that. So yeah, I would double down on David's response around certain things are kind of binary, right? They're black and white. If you're able to run LPA, it comes back with a firm confirmation around collateral relief, non-collateral relief. Other things are harder to understand. How to get consumers to positively respond, to put in their credentials, and it's not as obvious as it may seem. It's not millennials and everyone else. Right. We're seeing millennials are more apt to start digitally, but we're seeing that they almost always want to follow up by talking to someone that understands what they're doing. They want to share it with their parents or friends and make sure they're doing the right thing. They want to talk to someone that really knows their stuff and can direct them as a consultant and kind of walk them through this experience. Whereas, like Kevin said, old guys like us, like, okay, I've been there, done that, just get out of my way. I'm going to do everything digitally. I've been there, done that. And I think learning over time about how to optimize around things that we can control, like how to get consumers comfortable with asset linking and educate them on the privacy considerations, the ease considerations, and the upside for them is super important. But it's not something that you just know. I think Freddie can be helpful in kind of sharing best practices. I think you can look at competitors, you can look at our sites and figure out kind of how we've done it. But it's just stuff you got to get to work on, and you got to start understanding the data and understanding, how to get different people to react to modernize this experience. I think it's on all of us to make that happen.
Thanks, Tom. I'm going to try to get to one or two more questions. Okay. what are some specific areas for lenders to focus on today to help them better use automation in their processes? Does somebody want to take that?
I'm sorry, could you repeat the question one more time?
Sure.
So I'll make sure I answer it properly.
What are the specific areas lenders can focus on today to help them better use automation in their processes?
Got it.
I can jump in.
Something else there. Oh, go ahead. Go ahead, Kevin.
All right.
I'll follow you, please.
For me, it really goes back to documentation and communication. So we talk a lot. I know a lot of us on this call, whether we've worked directly for technology providers, whether we've worked directly for lenders, we have a large network of loan officers, processors, underwriters, who I can tell you from my personal view, reach out all the time, asking questions, right? Hey, I see that we can take advantage of this. And one of the biggest fundamental components that I've heard is lacking is just hey, we just need to be communicated to. We need more education on how to leverage these things. So whether it's, Copilot is available for a lot of these people to work with consumers on, but they may not know the full gamut of what they're using. So as you look to adopt any of these automation types of tools, again, make sure you have a plan to communicate and educate your users on how to leverage these things the right way and what they should be communicating directly to the consumer. There's a lot of myths out there. It's kind of head scratching to me for as long as I feel like I've been personally talking about this, of some of the questions that seem fundamental. So we ask ourselves all the time here at Freddie is, what can we do to build on the education tools that are out there and make sure that we're hitting the right audience? And I know that's something we're doing now, but it really starts with the education by roles. I don't know what your thoughts would be.
We got about 6 seconds.
6 seconds. 6 seconds.
That was about 60 seconds.
60 seconds. Okay. So, I agree with everything Kevin said. The only other thing I throw out there is, taking my Freddie hat off for a minute and just looking at automation as a whole. We still see a lot of lenders who aren't leveraging what their LOS is telling them, meaning the LOS has clear data being captured that an event has been completed, but nothing gets automatically triggered to tell the processor or underwriter that the next thing needs to get done. And so I think there's like some really fundamental automation pieces that really could provide a lot of benefit that lenders need to be paying attention to. But when it comes to Freddie's tools and where we play in this space, truly integrating with LPA in a way where you're bringing back the data. Dom mentioned that they're actually bringing back the data and doing their own translation on the conditions and determining kind of what it means in human speak and borrower speak. There's so many lenders today that still are only getting conditions back on the certificate and are manually doing things with them versus having those conditions automatically come back and drive some type of workflow. And so before you can even really fully take advantage of some of our more sophisticated offerings like AIM and ACE, you need to be able to be properly integrated and leveraging the data that's coming back in that integration from LPA to be able to take advantage. And then the last thing I'd close on with this is that when you do get to the point of leveraging AIM and ACE with us, we have a lot of details to kind of show you like, hey, here's the sweet spot. We know if a borrower has these conditions if the loan has these conditions and the borrower has these characteristics, your likelihood of getting AIM is 80% versus 8%. And so, talking about starting small, we can help you isolate some specific use cases that would probably provide really good initial results that you can build from there.
Yeah, I just have one last comment, David. So, I would tell everyone that I consider myself super thankful to be, as busy as I've ever been in my career, right now. But I'm learning every day and I reach out to a large network as well. So I reach out to, the folks over at Freddie. I reach out to our competitors. I had, 2 or 3 conversations yesterday with different, what would be competitors to Guaranteed Rate. And we openly share information. There's certain things that certainly are secret sauce. But for the most part, I think everyone wants to get better, and we all recognize, the impact we can have on the country. And I think you'd be surprised if you reach out to, some of your peers or competitors or partners or vendors. People are pretty willing to share, what's working, what's not.
Thanks, Dom.
Great point.
So we did not get to all the questions, but we will follow up with people to get those answered offline. And we are over time by a little bit. So I just want to thank all of our great speakers, Dom, David, Kevin, Piper. Thank you so much for joining us today and for sharing your insights. And I'd like to thank Freddie Mac for sponsoring. On behalf of National Mortgage News, thank you all for joining us today and have a great day.
Thank you, Danielle.
Thank you. Thanks for having us.
Thanks.
Bye, guys.
Thank you, everyone.